So do you want to get to the SPAC king? The reason I'm so eager to get to this, one of my
Mhm.
predictions at the start of the year was the SPAC market again. Companies, I don't. It's not really a sector, but a segment. Companies that raise money this route, the blank check route. I said would continue to be a poor area to be involved with. There was an article I read. Down goes the SPAC king, and it's they. I think his name is Chamath Palihapith. I can't say it.
Yeah, I don't want to attempt it.
I'll
I
put
should
his
not
face
be.
up in the
Yeah,
name or
can you?
something.
Chamath
Yeah,
is what I call him.
yeah.
His name became synonymous with. I'm laughing at myself, not his name. I just want to put that out there for sure, because I can't pronounce it. With special purpose acquisition SPACs or blank check companies, just as the momentum for high growth risk assets was hitting its stride, essentially. Now, unfortunately for him, what goes up often comes down. And let's be honest, he made boatloads of money in this sector. So I think Chamath we shouldn't be shedding one tear for him. He's done incredibly well. But the SPAC King this past week, that he shuttered two of his blank check firms, which raised over 1.1 billion from investors. So he cited valuations and volatility as the two biggest obstacles in closing deals. So I mean, to me, I mean, valuations have come down. So there could be, and it would still, I would still say in some segments of the tech they're still too high, but they couldn't close deals, so that money gets returned to the original investors. Just to track how SPACs, companies that have raised money in the U.S. via this route, have done from their highs. The DSPAC index, it tracks companies that successfully merged with a target. So went public via this route, essentially. It is down, that index is down 82% from its 2021 peak. Roughly a quarter of stocks are trading under $2. So, but there's over 550 still SPACs holding over 150 billion in cash that needs a home before their deadlines hit. You raise money through a SPAC, and then you have to do, like, it's in Canada, we call them qualifying transactions. It's basically you have to take that cash and invest it in a business before a deadline hits. Now, that money's just sitting there, so there may be more of these of this cash return. And it plays into another topic that we're talking about. I think Brad had an article about a ton of cash sitting on the sidelines. Well, there's a ton of cash sitting in these SPACs, no places to go. I mean, to me, and you can get into the article, Brett, in a sec, but it does seem to suggest there may be, as prices come down, maybe end of year or into next year, some M&A activity in the market. You would think that would pick up. Prices come lower, cash sitting there in some investment vehicles that need to buy assets, buy businesses, and also just investors holding cash right now. So there could be some acquisitions, or M&A activity could pick up. It would certainly be a better time for M&A. Honestly, we see more M&A activity at the peak in a cycle, which is just, is bass backwards, right? Like, you should not be making more acquisitions at the peak of a cycle. You should be making those. And it actually sometimes gets quieter. Maybe this time there'll be some money sitting on the sidelines, but it tends to be harder for people, and I don't know if it's a human condition, to pull the trigger when things are lower or going down, but it is the right decision in the long term.
It's also just from the perspective of the acquiring company. You typically do acquisitions when capital is available and when capital is cheaper, right? And that's when the market is hot, when we're around the market top, when things are most expensive. Yeah. So it's it's a bit of it's somewhat ironic that the time that the acquirers are in the best position to make acquisitions is often the time that the acquisition quality based on price is the lowest as well. But I mean, it's kind of crazy, and I think you'd agree, Ryan, that we're talking about SPACs even as like a sector or a theme, because it's really not. It's just a structure of a business. It's just a way to take a company public, in a more simplified form than your standard IPO, right? So ultimately, you could have companies that are in technology, in agriculture, in all sorts of different industries, and really you need to just evaluate it based on what market the company's operating and what type of a business it is. The fact that it's a SPAC, I mean, people got excited because there's a period of time
Well,
when the
they
market,
saw headlines.
everything was going up.
Yeah.
Yeah,
They saw
exactly. They saw
headlines. I
headlines.
made this much. This SPAC jumped this much right when it IPO'd. But here's
Potato
the
Head
cold hard data.
362 or whoever's that
Made
crypto guy that
made a ton of money. Yeah.
yeah, he
But
made a
like,
ton of
great
money
meme.
on it. And
but
if
the
Potato
thing
Head
is,
362 can
the
make
cold hard
millions.
data though shows like from its highs down 82%. That's just the average of all those companies that use that methodology, raised capital that way, that structure, and from their highs in 2021 down 82%, having made a transaction and gone public that route. Just shocking destruction of capital for people who were investing right when those companies went public. It's a cautionary tale. You're not investing in a company because of its structure, because it was a SPAC. You're investing in that for the business at that point in time, growth prospects going forward, current valuations, and those things were thrown out the window to just, here's a big name involved with a SPAC. Let's get involved with this. A ton of euphoria, and it just ends up being a recipe for disaster. Now, what may happen here, I think, because we interviewed one of these firms in LA just in the spring, and they have a ton of cash. They've kind of been painted with the same brush as the entire segment, but they are growing now. There's a ton of cash in the bank. The share price has been beaten down, and there may be a few these babies in that sector that were good businesses that were acquired that now get beaten down, and you may be able to look at them at low prices. That is when we will look at a company more closely. And there's, a couple that we're monitoring right now that look to have good businesses that they bought, and they happen to raise quite a bit of money, so they have net cash positions. But the market has been beating the hell out of them because, people bought at inflated prices, and also just being associated with a SPAC is bad. So, you get, eventually it shakes out. That business it won't matter which way the company went public, but we may get an opportunity to buy some of these companies at a discount, which will be great to see.